The big question that we have today, folks, is will the small caps continue their downward spiral until they crash, and or is there a glimmer of hope on the horizon? So let's get up and dive immediately into the IWM chart. We're going to be covering a lot of stuff today. Neil's got some really great stuff in our face-to-face we're going to talk about, and he's going to review two stocks for us that even if they're getting a pullback, you may be wanting to get on your big watch list. Let me take a look here at the IWM, the Russell. The Russell broke on Wednesday, gapped down below its 50-day moving average, as we see right there, and it is now continuing to sell off. We took off that swing low right there. So now we have a basically multiple swing low, swing, lower swing high, lower swing low. And so we may zigzag all the way down to where approximately the 200-day moving average, which is about which is sitting at 189.41.
I don't see your charts.
Oh, gosh darn it. Huh. Thanks for letting me know. Here we go. How about if we do this?
No.
How's that, guys?
Yep.
Okay. Awesome, Jason. That's absolutely fantastic. Let me just kick this over because it will be editing this video a little bit later to get back online. But where we started it with, guys, is we started with operator error is what we started with, but we started here with the question, will the small caps continue their downward spiral, or is there a glimmer of hope on the horizon? To answer that question, let's jump over into a picture of the Russell, or as represented by IWM. Now you can see the charts now, right?
Yeah, I can see the chart.
Okay, awesome. So IWM, notice on Wednesday what happened. IWM gapped down, there's a big gap here, below the 50-day moving average, and then went back up, tried to rally above it yesterday, failed, and now we're getting a big sell-off today due to the financial. JP Morgan had a crappy report and that kind of stuff. Take a look at where it may go. I'm looking at a zigzag type pattern, zigzag, and then possibly heading all the way down to the 189.55 level. We'll see if that happens. Also, that is the 200-day moving average. And notice all of the momentum, including the weekly momentum, which is always a stronger indication, is all pointed down and breaking down. I always like to go back in time and look to your left. See what happened the last time the TSI on the weekly chart crossed over. We went on a significant dump to the downside with IWM. And what I like to do on evaluating that is how far might we fall here? Well, we can always look towards symmetry. And so if we get a symmetric move, because oftentimes stocks and indexes, they run on symmetry, and so that would give us, if it did the same type of symmetric move, gives us a downside target of about 174 on the IWM. The 78.6 is also another area where it could slow down and stop at about 182. The big thing driving what's going on with the Russell, of course, is interest rates and inflations, which small caps tend to not do as well in a highly inflationary environment, and in a where the interest rates are high also compared to what they could be if they were lowering the rates, because the cost of their borrowing money to stay in business is greater than or is higher than some of the larger companies out there that are working. So, Neil, that's what I've got on IWM. It's looking like, like I said, we could get a pullback all the way back into the magic fib box or lower. Another place I'll keep my eyeball on is right there at the 50% retracement, which is about 193. So what's your thoughts on IWM?
IWM, I got a sell signal on my daily triple screen a couple of days ago.
Mm-hmm.
But the weekly is still holding, including the MACD and RSI. So one of that had to break before I'd say, okay, it's going down. I still have some hope, I think.
You still have some hope. Okay. And so, yeah, and I'm watching also these weekly momentums. And I'm not saying that I won't get back into IWM, but our premium members are really pleased because we actually got into a trade on TZA midweek when it did hit the breakout. And TZA, we hit our profit target number 1 today of 10%. Profit target number 2 is up here at 21.50. We bought this right about coming up off of the 34-day moving average as it pulled back in here towards I think that's where we bought it. Let me double check something here. There we go. Answer that question. Yeah, we bought it out at on this bounce right there, actually, at about 1793. So it worked really well for us. So let's kick on back to, well, actually, we want to kick on back to that. And so I want to actually just want to take a minute and welcome everybody before we get into the rest of the indexes and into the stocks we're going to be looking at. Anil and I'll be working through dissecting what we see going on in the market. And as I said, I'm Dennis Wilborn and Anil Parikh, our market sage. How long have you been in the market, Anil? How many years?
Oh God, since got active in 2000, really. 2000.
So you have 23 years in the market. And then I got started back in 1993, I want to say. So between the two of us, we've got about 60 years worth of experience in working the market. So I'm glad everybody is jumping on board to, let us help you, navigate the turbulent waters that happen with these in markets like today. And so that's what we're looking at doing. The other question that comes up today is what the heck is going to happen with the crypto mining companies now that Bitcoin is going to have its reward for mining Bitcoins? Are you a Bitcoin person, Anil?
No, I have not dug into it.
Okay.
I trade, but I don't know the details.
So yeah, I tend to trade the entities that are dealing with Bitcoin, but not necessarily Bitcoin itself. But from what I understand, this is not the first time, and we'll get into this. I'm going to save the rest until we get into the session where we're talking about our stocks and that kind of stuff. So, but just keep that as a burning question because we're going to dive in and do some digging. We're going to do our own mining on the Bitcoins. And so let's go jump back. We already took a look at the initial entity. And so let me pull back up our chart here. And let's take a look at the spiders. We took a look at the Russell. Similar type situation, although the Spider or S&Ps are in a much better position than the Russell. Why? The reason is because, one, we're still above the 50-day moving average right there. At the same time, though, we have crossed below the 8. Now, that would be a normal sell signal for me. If I get a close below the 8 over here on the weekly chart and my momentum has shifted to the downside, I want to be looking at doing a similar type measurement, and I've already put that in place, where I'm measuring this pullback here, and I'm comparing it for some symmetry to how far could it pull back here. I really like what this looks like, Anil, because if we do get a 100% symmetric pullback, look where it puts us, right in line with where it broke out before. So we know there's a pocket of buyers probably there. If you follow, like Wyckoff, that there's buyers or there's a demand for the stock for the entity right there. So I would look to see, hey, if I get down in here, that's awesome, because look to your left, and that's where we broke out of before. For the time being, though, am I a buyer? No, I am not. I am not a buyer of the SPYs. And I tend to not really buy the spiders. I will look to buy. What I look to buy is I look to buy either the NASDAQ TQQ or the Russell IWM and or TNA or TZA, one of those leveraged ETFs. And so that's what's going on with the spider. Let's take a look at what is going on with the NASDAQ as represented by the Qs, QQQ. There we go. So similar type situation, exceptional that we're staying above the 50. However, we are getting the jackhammer effect where price actions, every time it comes down and hits and then bounces and hits and bounces, is starting to bend the 50-day moving average over. And eventually we get a close below the 50, then stand by, because we're probably going to drop. Recognize, though, we do have this longer term uptrend here where that is a potentially really great target. I would, and again, draw a similar type line comparing here, taken up to this high. And it gives, what it does is it gives you an idea of where price actions could be pulling back to. And so if you are just joining us, let us know which state you're joining us from. Hey, Mike, nice to see you there. Steve, Jason, Rao from California. I grew up in California, down by Monterey and Carmel. Great place. Actually, it was in Salinas. Well, actually, it was in Prunedale, California. Does anybody know where Prunedale, California is? That's where I grew up. Denver, all right. But Neil, I know you don't know where Prunedale, California, because you're an East Coast guy, right?
Yes, I don't.
Anyway, yeah, I was out in the country, and I was a country bumpkin. Some people may think I still am, but that's okay. So what's your thoughts on what is your triple screen telling you on the NASDAQ and the spiders?
On the QQQ, actually, on the daily, I have a sell signal.
Okay.
On QQQ. Weekly is still intact, but MACD has broken down, so that's a cause of concern.
Okay.
And on SPY, it's basically same story.
Okay. So when you say there's some concern when the weekly indicators roll over, like the MACD and all that kind of stuff, what do you mean by there's a concern?
Concern, that means watch out. It's going down, because I see a sell signal on the daily.
Okay.
And then on the weekly, it's on the SPY, it's barely holding the MACD. RSI is intact, but on QQQ, the MACD has gone negative. So that is a concern. That's it might go down further.
Okay. And so I'm interpreting what you're saying is that you basically, if you primarily trade in a bullish direction, when the MACD and your triple screen is telling you what it's telling you, it's a time just to be leery and not necessarily jump on any long
That's right.
position.
Yeah, I would not get into a new trade here.
Okay, cool. Well, let's go ahead and here's where we're sitting as of about 12 o'clock today. I always put on, this is last year's equity curve, and I don't put it up here to brag or anything like that, but I put it up here as representative of this is what tends to happen. No, no P&L goes up in a straight line. Yes, the white line is my goal for every year. Yeah, Barbara, I know that. And so I know you would know where Prundo was. So but note, the February to March last year, I showed a loss. I was flat for April. And so this type of thing, you have to get used to this. July, we had a loss. And so depending on where you take your snapshot or where you want to compare with, a lot of people go, oh, well, for the year you were up here. But there were times when it looked really crappy. But I knew my system. I knew the characteristics of my system. I knew that it basically hits 65% win-loss ratio and repeats at 37% per year for the last 12 years. I know that if I kept following my process and follow my system, that the numbers would work out because the probabilities were on my side. So let's run on over. And I just wanted to share that with everybody, because then this is where we're at right now. April is not complete. And here's where we're sitting. With the sell-off, Russell has gone back down into negative for the year. We're sitting at 9.88 for the year. And again, but it has not been in a straight line. It's been zigzagging up and down. With that said, Anil, let's click over to this other great shot of you and I. Here we go. Hey, our face-to-face question today, I think, is really an awesome one. I got to thinking about the concept of objective versus subjective trading, and how do you navigate the minefield of bias, or the minefield pit, or the pit you could fall into if you are a subjective trader. So Anil, why don't you kick us off? Does everybody know what objective and subjective means, right?
I want to clarify, everybody.
Go ahead, Anil.
Now, on the subjective and objective, my way of thinking about that thing, if we have the objective trading, that means you know your system, you know your rules, you're following the rules, and you stick to it.
Yeah.
When you go to subjective, it's you're following the general news and your feelings and gut feelings and all that. And my biggest challenge is when I am an objective trader. However, sometimes the news, and you get caught up with the things and you make mistakes, which I have. I give you an example on Disney.
Right.
My system gave a very clear buy signal on Disney back in November. And I said, yeah, Disney, that can't be true. So instead of staying objective, I became subjective and lost some opportunity.
So a subjective trader is more prone to follow their bias and their emotions.
Bias and emotions, or don't even know it, and there, and you find out later. Oh,
Yeah, that's that. I know that. I think everybody else, well, I think most traders start off as being subjected. When I was flying, we used to call it, we would fly by feel and all that kind of stuff. But sometimes if you try to fly by feel, it gets you in trouble because let's say you are in a cloud cover, your feelings will lie to you, and it's amazing how if you're not using your your objective instruments, you wind up crashing and making a big smoking hole in the ground because you think you're right side up, but most of the time the pilots they're not. They're inverted and they're heading down, but they're just as happy as can be because their feelings are telling everything's okay because they can't see. And so awesome. So the objective and subjective trading for me is I want to help people deal with that. And have you ever heard of I think it's ODA loop?
Yep.
Okay. The ODA loop is a military concept that was divided by actually an Air Force colonel. And so, I don't know how, you old Air Force guys out there, I don't know how much we can trust this. I don't Trader Joe's. No, I'm just joking. But ODA stands for Observe, Orient, Decide, and Act. And it's a strategic tool utilized to improve decision making. The thing that while this is there and we may be aware of it, I think for many traders occasionally they jump immediately to the take action mode, and that's what gets them into trouble. Is they jump because they don't consider having rules. They're doing it by the seat of their pants. And so what are the things observe first, gather the latest information from your environment. Makes sense? And we're talking tactical stuff here, folks. Orient, analyze the information and use it to update your current reality. That helps get rid of bias. D stands for decide, which is base your orientation. Okay, based on your orientation, make a decision, and then A, act. Execute your decision, then return to the observation step to start watching what happens. I think it was Mark Douglas who said that we need to become expert observers of the market and not necessarily action takers of the market, because we can learn a lot by taking an observation. So what does this do for us? One, it reduces our emotional bias by starting with observation and orientation. And traders can then, their decisions are based on data and analysis rather than gut feelings or emotions, and thus reducing the influence of the two-headed monster, fear and greed. Promotes adaptability. The loop encourages continued reassessment, continuous improvement. That's one of the things I sat and went to a class with Charles Deming, the guy who did the continuous improvement stuff many years ago before he passed away. And that was one of the things. He says, always look to be continuously improving your process. It improves your decision speed, which I think is absolutely right, because it allows you to put your checks in the block very quickly and then make faster trading decisions, because if it doesn't meet your trading criteria, you pass on the trade. And then the orienting requires a comprehensive analysis. And so it just encourages that analysis to take into various considerations and factors. And last but not least, it avoids premature actions. That was one of my big things, Neil. When I first started trading, I was constantly either jumping into a trade too early or jumping out of a trade too early. And then to try to I overcorrected then, and I would get in too late and stay too long. And so my loop was busted. You know what I'm saying?
Yeah.
And so
I think the key thing I picked out from what you just said, as far as I'm concerned, is the decision speed.
Ah,
And the decision speed is very important to take the timely actions. As,
yep.
as if you don't do it, whether you're getting in or getting out, uh, if you thought it through, decision speed should not be a problem.
Cool. Now,
But
do you talk about decision speed? Because I always suggest to folks, especially if you're a swing trader, to make your decisions outside market hours, because one, it reduces emotional decision making, and secondly, I think it actually can reduce your fumbling or fat fingering trade entries and exits, which I know we've all made that mistake. Um, and so just so do you do that? Do you put your orders in before the market, after the market, or after the market's closed during non-market hours?
uh, no, I what I usually do is I do it between, let's say, 3 or 4 o'clock.
Okay. So final hour.
Yeah, basically in the final hour after. So I know day before what I really want to do, but I wait usually
Okay.
final hour.
And that's really what, wise doing that during that's I agree with that. The final hour, I think, is really awesome time to do that because one, all the noise for the day is gone, and the candlestick that's left and during that final hour is typically pretty accurate story of what the candlestick's trying to tell you. The And so one of the things we've been doing with the AutoPilot trading members, and now that we have our own Discord premium channel set up, is we are literally putting out uh, trade opportunities during that final hour over on the Discord. And then Tim says, yeah, Tim says, I love this. Nice comment, Tim. My wife is a subjective trader. When she's right, she tells me I told you, and when she's wrong, she's a buy and hold, hold until she's right. Okay, well, now everybody knows, Tim, and that was really awesome. So, hey, let's go ahead and take a look at the what we're going to be talking about. A timely subject. Of course, we're going to dive into the state of Bitcoin and the upcoming halving, what that means to the crypto miners. Will that provide some opportunities for us? But before we do that, before we dig into that, let's go ahead and dig into a couple of stocks that Neil has been hunting down and researching. And so, what is the first stock you want us to take a look at, Neil?
I talked about NVIDIA last week, and there was a lot of chatter online about NVIDIA.
Okay.
This and what it's going to do, whether it has peaked or is it still going to go up, and there are mixed opinions in the market. My personal analysis, based on the factors that I follow more and more, and that is accumulation distribution, SMR rating, and up-down volume ratio.
Okay.
That's telling me that it's still holding. There's maybe it's changing hands. Maybe some funds
Okay.
are taking the profits, and some new funds are getting in, and some stealth activity is going on. That is what I think.
So yeah, so are you a buyer right here?
I'll probably take a small position again. Yes, I
Okay.
had it. I
'Cause I
got
know,
out. Get back in here.
so I know our premium members, we did a small position on NVDL, the 2-time leverage ETF for this,
Mm.
and which is really nice. As I said, look to your left. The last time, I always like to see what happened last time. And last time we did roll over here on the momentum. Well, look what happened. It just went sideways. Now recognize this sideways move is about 20%.
Don't see it.
Oh, sorry about that. Am I not showing my, gosh darn it, hold on, guys. Sorry about that. There we go. There's some video, and that's what I was talking about. Is right here, up here, Anil. It's really, it's a good place to buy it. But the last time it did cross over, it just drove sideways, was very well controlled, and so it may be going to do the same thing here. We'll see.
Yeah.
And so, what was your other one?
Other one is Salesforce CRM. And
Okay.
on CRM, I'm saying it's still in the base with good accumulation distribution and up-down volume ratio. And it's about, if I look at the Market Smith chart, it's about 7% from pivot. So it's maybe a good opportunity.
Okay. So you're close to now. Are you waiting for a trigger of it breaking back up, or going to buy off support?
Probably buy off support right now.
Okay, because it is sitting there right on top of the 50-day moving average right now, and it's the momentum, daily momentum is getting to the place where it should be turning around. So yeah, I like that, and Salesforce is going to continue to act well. And so awesome. So the one that I was looking at today, I'm going to look at JPM. JPM, basically, I think we went crazy with that. But Jamie Dimon, who I think he's the head guy at JP Morgan, right? It was his talking, while they did okay earnings wise, it was his fear that he paraded to the market that I think resulted in this big gap down. However, we have to watch this big gap down because this is significant. It's significant because it is a huge volume, larger than it's been for quite a while. We're dropping below the 50-day moving average, and it looks like we're going to close below the 50-day moving average. So when that happens, that immediately shifts my thoughts to let's look for a downside opportunity trade on JPM, which would mean basically a rally, maybe back into this window here, or maybe just to the halfway point of that, today's big red candlestick for a continued move to the downside. Where's it likely to go? 177 or all the way down. It could get down to 165. Now, those aren't huge. Those are not huge moves for a stock like JP Morgan, because right now, JP Morgan, it's like this drop that it's done right here. Well, that is right there. That's only 9%. And even if it does, so, I kind of like JP Morgan. The next area, like I said, down at somewhere between 173 and down at 165, it would be of interest to me. But I think I'm using it right now as kind of like the canary in the coal mine, that it may foretell the markets and the economy getting worse. Now, we don't know that for sure, but that's one of the things I'm thinking about. Then, as far as Bitcoin goes, with the halving, I'm looking at 3 different entities, but I'll cover 2 of them. Coinbase. Coinbase is not a buyer, not a miner, but it has gone on one heck of a nice run from when it broke out down here. We just take a real quick note. It went from here. Even it closed right now, it's about 96%. It got as high as 123% from where it took off at. And right now we are getting a close back potentially below the 8-day moving average, which could drive us back down, or it could bounce around a while just around the 8-period moving average. Look for a breakout level of, I would say 206 or so. The other stock is this miner, Marathon. Marathon as you can see, is melting down. This is one heck of a, kind of a double top that we're seeing right here. And at the same time, what are some of the things that as the miner's reward is halved? It's not the first time it's happened. It happened in 2012. It happened in 2016. It happens in 2020. And when that happens, the mining operation revenue and profitability favors countries that have low utility prices. I didn't know this, Anil, but it does. It favors countries with low utility prices, and that's places like, believe it or not, Iran. Some of the other countries in the Middle East have lower utility prices than Europe. Europe's not a really great place. And then the U.S., our utility prices are not that great either. So the winning mining companies will be the ones who will operate the most efficiently as they upgrade their equipment to be able to mine at a much more efficient manner. So again, I'm not a buyer of Mara right here, but I think that Mara will be one of the players once the dust settles after Bitcoin cuts in half the reward that it's given the miners. So that's the two stocks I wanted to cover, or three stocks really quick. Any thoughts on the miners or JPM?
No, not really. I think you covered it nicely.
Okay. So, okay, let's go ahead and jump over to just, I want to just shift gears really quickly and focus on what could be your beacon in these struggling times, tumultuous seas. And that's basically just get on board the premium membership and you can discover and illuminate your path. But we offer a good 3-month test flight. Check it out. See if it's a fit for you. We've got a lot of traders over on the Discord channel that are absolutely knocking it dead. And they're really, and also I love how we are all over there and have a wonderful community coaching each other up and helping each other. So I'll put a link down in the bio, or not in the bio. I'll put a link down in the description. So my question for you regarding Mara, Mark says, where do you see a new support zone? Let me zip back to that really quick. I will answer that question on Mara. Well, we know we've got a support zone down here based on this pattern. And so that's at 1462. So that's one. Then after that, then we start getting down into the $11 area. And then finally down into $7.53. That's where I would see those support zones. Okay, good question. So let me ask you guys a question. And again, thanks for joining whichever platform you join on. But what part of today's live stream was most empowering for you? Did you like face-to-face, the stock pick? And again, you're not going to hurt our feelings, but let us know. Did you learn something? And just drop a note down in the comments section. And what was some of your takeaways on today, Anil?
I think I already said it. It's the decision speed for
Okay.
how to be just right on that one.
So I don't know if we can ever be just right. I don't know. And that's something I always kind of, because I think stock picks and face-to-face, thanks, Wayne. I think part of the deal is a person who's a perfectionist really has a hard time learning how to trade stocks because there is no perfection in trading stocks. There are three things that we can be perfectionists with on trading stocks. One, is we can, what we're going to trade, you make that decision. 2, we decide where we're going to enter, and 3, where we're going to exit, and how much we're going to invest. Those are the only 4 decisions that we can be perfect on. And so anyway, so index reviews, face-to-face, objective and subjective. Oh, thank you, Paul. Yeah, because what Anil and I would both like to know is, what would you like to see more of? Or, index reviews. Thanks, GF. Stock picks. So it looks like it's pretty broad across the whole scale there. So, hey, what? Paul and Tim are married to the same woman. Look at that. I mean, my goodness. Because he says, Tim, my wife is always right also. No matter where you're joining us from, thank you very much. And whether you're navigating small caps or deciphering the crypto conundrum, stay informed. Objective is key. And so I just want to thank you. I want to thank Anil for your valuable insight and your chat this morning. So we're looking forward to your presentation at the BAM, Bay Area Moneymaker IBD Meetup Group. Now, we said it was on the 23rd, right, of April?
23rd.
And that's going to kick off at 5 p.m. Pacific time for all the folks on the East Coast. And so, hey, don't forget to like, share, and subscribe to the channel. We just hit over 4,000 hours worth of, I'm really just thank you, everybody. We got to 4,000 hours of watch time, and so on our YouTube channel. So thank you so very much. So until next week, trade smart and stay free. Aloha. God bless everybody. Thanks, Anil.
Thank you.
Hang on, Anil. I'm going to end the stream.